Applying analytical procedure to inter-financial statement designed to identify the relationship and individual items that appears to be usual that may affect the material misstatement of the inter-financial information. Reading the interim financial information and considering whether anything has come to the auditor's attention causes the auditor to believe that the interim financial information is not prepared on materials but in accordance with the applicable financial reporting framework. The auditor may perform any of the review procedures before the simultaneously entities prepare internal. For example, if there is a practicable to update understanding of the entities in the program, including internal control and begin reading the applicable minutes before the end of the interim period. Performing some of the review procedures here in the interim period also permits order identification and consultation of significant accounting matters and affecting the interim financial information. The auditor performs a review of interim financial information. It is also engaged in perform an audit of annual financial statement. For convenience and efficiency, auditor may decide to perform the certain audit procedure consistent concurrently with the review of international information. The review of international information is orderly, does not require collaboration. The inquiry support legitimation claims. It is before originally not necessary to send an inquiry. Later on, the entities were. The direct communication to the entities lawyer will enable the litigation to claim direct communication with the entities lawyer with respect to all litigations to claim however, the appropriate matter comes to auditor's attention. That causes the auditor to consider whether the interim financial information is not the all material aspect in accordance with the applicable financial reporting framework. An auditor believes that entities where the outcome commerce auditor may obtain software evidence that the material financial information agree or reconcile with the underlying accounting reports or tracing the interim financial information. The accounting records such as ledger, balance, consolidated financial statements, agree in the consolidation of accounting records. Other supporting data in the entities records are necessary. The auditor should inquire whether the manager has identified all the events. And whether the manager has identified all the events and the date of the report has been adjusted and disclosure in the internal financial information. It is not necessary to auditor to perform the procedure to identify the events occurring after the date of the usage. Auditor should inquire whether the management has changed its assurance of the entity's ability to continue employing concern. As a result of the inquiry, this auditor was aware of the events and conditions that may cause significant doubt on the entity's ability to continue as going concern auditorship. Inquire the manager has plans to future actions based on the going concern and feasibility of this plan. Whether the management believes the outcomes of this plans will be improved situation and consider the adequacy of the disclosure about the matter of interim financial information, events and conditions which may cause significant doubt on the significant event and continue to going concern may have existing data for another financial information or may be identified result of inquiries in management or in the course of performance of a review procedure. When such events or condition comes to the auditor's attention, auditor inquire the management as to plans of the future actions such as plans to liquidate the asset, borrow money, reconstruct debt, reduce the delay expenditure, increase capital. Auditor also inquire as the feasibility of the management plans and whether the management believes that outcomes of these plans will improve the situation. However, it is not ordinarily necessary for the auditor to corroborate and feasibility of the management plans and whether the outcomes of the plans will be improved the situation. And the matter comes to the auditor attention that leads to auditor to question whether the material adjustment would be made in the interim financial information to be prepared in the all material aspect according to the applicable financial reporting framework. Auditor should take additional inquiries to perform other procedures, enable the auditors to express a conclusion or review. For example, if the auditor review the procedure leads to auditor to question whether the significant sales transaction record in accordance with the applicable financial reporting framework. Auditor perform additional procedures sufficient to resolve the auditor's questioning, such as discuss the terms of transaction, senior management and accounting persons, reading of sales contract, evaluating the misstatements. Auditor should evaluate the individual and its aggregate whether the uncorrected misstatement that has come to the auditor's attention on all the material to the internal financial information. In the misstatement which comes to the auditor attention include inadequate disclosures or evaluated individually or in aggregate to determine whether the material adjustment is required to the internal financial information for it prepared in all material aspect in accordance with the applicable financial reporting framework. The auditor exercises professional judgment in evaluating the materiality of the all misstatement that entity is not correct. Management responsibility. Auditor should obtain written representation from the management. It is acknowledged that the responsibility for design and implementation of the internal control to prevent and detect the fraud and error is a responsibility of the management. The internal financial information is prepared and presented in accordance with the applicable financial reporting framework. It is believed that it's a manager responsibility that affects the uncorrected mistake aggregated by the auditor during the review of the year, both individually and aggregate. To internal financial information takes on board. A summary of such item is included and the track return presentation. It has disclosed to the auditor of all significant facts relating to any fraud or subject to frauds on the management that is affected by the entity. The responsible disclosure is disclosed to the auditor result of the assessment of risk and that internal financial information may be materially stated as a result of the fraud. It is disclosure the auditor shall know actual possible of non-compliance with the laws and regulations where the effect considered when preparing the internal financial foundation. He has disclosed to the auditor all significant events that occur subsequent to the balance sheet date and prior to the date of review board may be required adjustment in order to disclose to the internal information. Auditor responsibility in accompanying information. The auditor should read all the information to accompany the internal financial information, consider whether the information is merely inconsistent with the internal financial information. If the auditor identifies that material inconsistent, the auditor considers whether the interim financial information or other information need to be amended. If the amendment is necessary in the internal financial information, the manager refuses to make that amendment. Auditor considers the implication for the review project. If the amendment is necessary for other information, the manager refuses to make the amendment. Auditor consider information in the review the report on additional para describing the material inconsistent or take action which such as withholding the issuance of review report the reports or withstanding from the manager. For example, management may present alternative measures for earning that more positive portray results of operations at the interim financial information such as alternative measures or giving excessive prominence is not clearly defined. It's not clearly reconciled with the interim financial information such as they are confusing and potentially misleading. If the matter comes to the auditor's attention that causes auditor to believe that other information appears to incur material misstatement of fact, the auditor should discuss the matter with the entity's manager. While reading the other information for the purpose of identifying material inconsistency and apparent material misstatement of fact may come to the auditor's attention. That is, information not related to apparent material, information not related to matter appearing in the internal financial information, the incorrectly stated or presented. When discussing the matter with the entity's management, auditor consistent with a variety of information manager responsibility to auditor's inquiry, whether valid disclosures or judgment or opinion existed, whether the request of management is consulted with the qualification of third party to resolve the apparent misstatement of fact. If the amendment is necessary to correct a material mistake or a fact of management if he refuses to make an amendment, the auditor considers taking further action on appropriate such as notifying those charged with governance and obtaining legal advice. Communication. When result of performing a review of internal financial information, a matter comes to auditor's attention that causes auditors to believe it necessary to make a material adjustment to internal financial information for it to be prepared in all material aspects in accordance with the applicable financial reporting framework. Auditors should communicate this matter as soon as practicable to the appropriate level of management. When the management does not respond appropriately within reasonable period of time, the auditor should inform those charged with government. The communication made as soon as practicable, either orally or in writing. Auditors' decision whether the communications orally or in writing affects a factor such as nature, sensitivity, significance of the matter to be communicated timely of such communication. If the information is communicated orally, auditor document the communication. When the auditor judgment, the charge to the government does not respond appropriately within the reasonable time, auditor should possibly resign from the appointment of auditor and financial statement, or possible to withdraw from the engagement or modify the report. When the result of performing the review of internal financial information, the matter comes to the auditor's attention, cause the auditor to believe the existence of fraud or non-compliance of the entity with the laws and regulation. Auditor should communicate that matter as soon as practicable to the appropriate level of management. Determining the level of management is appropriate, one is affected by the likelihood of pollution or involvement of members. Management auditor should consider the necessary reports matters to be charged with the governance and consider the implication of the review. Auditor should communicate the several matters of the governance interesting arising from the review of internal financial information with those charged demands. As a result of this performance review, internal financial information, auditor may became aware of the matter in the opinion of the auditors are both important and relevant to the those charged with governance and oversee the financial reporting and disclosure process. Auditor communicates such matters to those of the governance. Reporting the nature, extent, and result of the review of internal financial information. Auditor should issue and return report contains the following content of return report, an appropriate title, addressing the requirements, circumstances of the engagement, identification of financial information, review including identification of the title of the statement and content in the complete or content set of financial statements and the date and period covered in the financial statement. If the interim financial information comprises a complete set of a general principle purpose financial statement report in accordance with the financial reporting framework designed to achieve a fair presentation. Statement of matter management is responsible for preparation of fair presentation of interim financial information in accordance with the applicable financial reporting framework. Our circumstances is stated that the management is responsible for a preparation presentation of interim financial information in accordance with the applicable financial reporting framework. The statement that the auditor is responsible for expressing in conclusion internal financial information. The statement that review of internal financial statement is conducted in accordance with the standard of review engagement. The review of internal financial information is the independent auditor of the entity. A statement of such a review consists of following inquiries: primarily person responsible for financial and accounting matter, applying the analysis of other review process. The statement that review the substantial list in scope. An audit conducted in accordance with the standard of auditing sequence does not enable the auditor to obtain assurance that the auditor should become aware of the significant matters and might be identified in the audit that is expressed. If the internal financial information composed a complete set of general purpose financial statements and prepared in accordance with financial reporting framework designed to achieve a fair presentation, conclusion as to whether anything has come to the auditor's attention that causes the auditor to believe that internal financial information does not give true and fair view and does not presently fairly all the material aspects in accordance with the applicable financial reporting framework. In other circumstances, conclusion as to whether the changes has come to the auditor's attention cause auditor to believe the internal financial is not reported in all material aspects in accordance with the applicable financial reporting framework. The date of the report, place of the signature, auditor signature, membership numbers assigned to the Institute of Chartered Accountants of India, firm registration numbers and number of institute, whether as I see. Besides, UDIN also be generated state the review engagement, also the nature of the assurance engagement. UDIN has to be stated that the engagement performed in accordance with the SRE 2410 2410. A departure from the applicable financial reporting auditor. An auditor should express unqualified and adverse or conclusion when the matter has come to the auditor's attention that causes auditors to believe that material adjustment should be made to interim financial information for to be prepared in all material aspects in accordance with the applicable financial reporting framework. If a matter that comes to auditor attention that causes the auditor to believe that interim financial reporting it or may be materially affected by a departure from applicable financial reporting frameworks and management doesn't correct in the interim financial information, auditor should modify the review report or modify it determines the nature of departure when in practical states the effect of the interim financial information. If the information that the auditors believe it is necessary for adequate disclosure is not included in the interim financial information, the auditor modifies the review report and if practical include the necessary information as a review report. The modification to the review report is ordered according by the explanatory paragraph, the review report, and qualifying the conclusion. When the effect of departure is so material and pervasive, then the internal financial information that auditor concludes a qualified conclusion is not adequate to disclose a misleading and incomplete nature of internal financial information. Auditor express an adverse conclusion. The limitation of scope. The limitation of scope is ordinarily prevent the auditor from completing the review. When an auditor is unable to complete the review, auditor should communicate and return the appropriate level of management and those charged with governance. A person who review cannot be complete and consider whether the appropriate issue or limitation on the scope of imposed by the management. Auditor should not accept the engagement to review the internal financial information if the auditor primarily knowledge of the manager engagements or company indicates that auditor would be unable to complete the review because there will be a limitation on the scope of the auditor's review and imposed by the management entity even after accepting the engagement. The manager imposes a limitation on the scope of the review. Auditor has the rule of this limitation. The management refuses to do so, auditor is unable to complete the review of exposed conclusions. Such a case, auditor communications right to the appropriate level of management and those charged with governance. The reason why this review cannot be completed. Nevertheless, if the matter comes to the auditor's attention that causing the auditor to believe that material adjustment to the internal financial information is necessary for all the material aspects in accordance with the applicable financial reporting framework, and auditor communicates such matter. The auditor also consider the legal and regulatory responsibility, including whether there is a requirement of auditor to issue a report. If there is such a requirement, the auditor disclaims a conclusion and provides a review report, the reason why the review cannot be completed. However, if the matter comes to the auditor's attention that causes the auditor to believe the material adjustment to the interim financial information is necessary for the preparation in all the material aspects in accordance with the applicable financial reporting framework, the auditor also communicates such matters to the report. Other limitation of scope. The limitation of scope may consider when the limitation of scope imposed by the management in such a form as the auditor is ordinarily unable to complete the review of the express conclusion. It may be, however, some rare circumstances where the limitation of the scope of the auditor's work is clearly confined to one or more specific matter. That is, while material are not in the auditor's judgment, pervasive to the internal financial information. In such circumstances, the auditor modifies the review report by indicating the accepted matters such as describe the explanatory part of the review report. The review or conducted in accordance with the source and review engagement. By qualifying the conclusion, auditor may have expressed a qualified opinion on the audit of the last annual financial statement. Because of the limitation of the scope of audit, auditor consider whether there is a limitation of scope still standard and so implication of the review report. Going concern and significant uncertainty, as if the result of the inquiries of the review procedure, the material uncertainties related to the event or the condition comes to the auditor's attention that cause a significant doubt on the entity's ability to continue as a going concern. Adequate disclosure is made in the interim financial information. The auditor modifies the review report by adding the emphasis of matter. Auditor may have modified the prior audit or prior report by adding the emphasis of matter para to highlight the material uncertainty related to the event or condition that may cause significant doubt of the entity's ability to continue its going concern.
the material uncertainty is likely to exist and adequate disclosure to be made at the internal financial information, auditor modifies a review report on the current internal financial information by adding a paragraph to highlight critical material uncertainty. If and material uncertainty that cause significant doubt about the entity's ability to continue a going concern is not adequately disclosed in the internal financial information, the auditor should expose and qualify adverse information as appropriate. The report should include specified reference to the fact that is a material uncertainty. Other consideration in terms of engagement includes management and arrangement that where a document containing internal financial information indicates such information has been reviewed by the entity's auditor. The review report will also be include the document. If the management has to include a review report in the document, the auditor can seeking legal advice to assess the determine appropriate course of action to be submitted. If the auditor has issued a modified review report and the management issued internal financial information without including the modified review report in the document containing the internal financial information, auditor considers seeking a legal advice to assess the determination of appropriate course of action of the submitters and possibility to resign from the appointment to the audit of the annual financial information. The internal financial information consists of condensed set of financial statements, not necessarily include all the information that would be included in the complete set of financial statement, but may rather present an explanation of the event of changes that are significant to the understanding of the change in the state of affairs or performance of the entity since the annual reporting date. This is because of the presumed that the user of the internal financial information is able to access the latest audit of financial statement, such as the case of listed entities. In other circumstances, auditor discuss the management need to internal financial information to include a statement that is read with the conjunction with the latest auditor financial statement. In absence of such statement, the auditor will consider whether it would be referred to the latest auditor financial statement. Internal financial information is misleading circumstances and the implication of the review. Documentation. Auditor should prepare a review document that's significant that sufficient appropriate provides a basis of the auditor's conclusion and prove evidence of the performance of accordance with the SOP and applicable legal review. Review is a limited assurance engagement. A limited assurance engagement provides a lower level of assurance than it involves a fewer procedures and can have sufficient appropriate evidence on the basis of the limited conclusion to be drawn. A standard on review engagement. A review of the financial information is undertaken by the practitioner. SRE 2400, SRE 2410 had been issued in the regard. SRE 2400 deals with the practitioner responsibility of performing a review of historical financial statement. Then the practitioner is not the auditor of the entity's financial statement. The practitioner objective to use accordance with the SRE 2400 will appear limited assurance, primarily for performing an inquiry analysis procedure about whether the financial statements are whole or free from material statement and due to the report of annual statements are whole or communicated as required by the SRE. Prior to accepting in review engagement, the practitioner shall determine the precondition for accepting a review engagement exists. The practitioner perform a review engagement mainly focus on inquiries and analysis procedures. Besides the procedures of addressing specific circumstances, as also performed. Additional procedures are also performed when the practitioner becomes aware that the financial statement may be materially misstated. Written representations and obtained from the evidence for performing procedures never will lead to conclusion drawn with the review report is issued. SRE 2410 applies to the review of internal financial statements performed by the independent auditors of the financial statements. The internal financial statement that is a report and presented according to the applicable financial reporting framework and comprises a complete of condensed set of financial statement prior to the shorter than the entity's financial year. The objective of the engagement to review the internal financial situations enable the auditor to express in conclusion on the basis of the review anything that comes to the auditor's attention and causes the auditor to believe that the internal financial information is not reported in all material respect in accordance with the applicable financial reporting framework. Auditor make inquiries and perform articles and other review procedures in order to reduce the moderate level of risk to an acceptable low level in expressing to prevent from the risk of expressing an inappropriate conclusion and the internal financial information is materially mistaken. Review documentation should be prepared that is sufficient and appropriate to provide basis or provide evidence that is a review also performed in accordance with the requirement. Specialized area. Know about the special circumstances applicable to respect to the audit of any statement. Preparing in accordance with the special purpose framework SRA to accordance with the SRA 800. Understand the meaning of special purpose framework, knowing about the special consideration applicable in acceptance and planning and performance of the forming an opinion, reporting types of engagement. Gain knowledge about the special consideration applicable to the audit of single financial statement or the specific element, account, right, terms of financial statement according to SE. Understand the meaning of single financial statements, elements of financial statement. Know about the special consideration applicable to acceptance and planning and performing of an opinion and reporting type of engagement according to SI. Understanding the responsibility of the auditors and understanding the engagement report, summary of financial information derived from the financial statement, audited in accordance with the SE, same audited to SE 10. Following special consideration, applicable acceptance, planning, performance, forming opinion, reporting of the engagement according to SE 10. 810 and understanding this audit report issue of summary financial statement according to SE. In specialized areas, say 800 detailed the audit of financial statement prepared in accordance with the special purpose framework. SA 505 dealing with the audit of single financial statement for or a specific element according to the account or item of financial statement. SA 510 deals with the engagement to report on a summary of the financial statement derived from the financial statement audited by the same auditor. CA Julius joined the audit to be based on audit for on her first day of office, she was handed over assignment returning to the audit of the client whose financial statement has been prepared in pursuant to the financial reporting provision in the contract. They said that the client has entered into the contract with various entities, stipulating payment to be made, and those entities on the basis of certain parameters and rule of service entered by these entities to the auditing client. The contract inter alia contained the provision of financial statement shall be specifically prepared and consider the requirement of the contract. She was in delivering so standard accounting operating apply to such type of engagement. Was there was a special consideration to the board mind auditor before accepting the engagement? Most importantly, she was worried about the reporting aspect. The report of such case was going to be issued under the company sector. So, in fact, that it comes to play such cases, she was turning its critical towards a possible use of it. She was wondering whether there was an authorized pronouncement on the issue. Curing herself to pass the auditing in CA final exam with a bare minimum work, she was told the IC website of the CA. So, she also told the records of webinar on the issue gave better clarity. While turning the webinar, she found that the SA 800 to SA 800 dealt to the specialized areas. The SA deals with the special consideration audit of financial statement report in accordance with the special purpose framework. SA 815 deals with special consideration to an audit of a single financial statement or a specific account or a specific item in the financial statement. Although she had read about the elements of financial statement, a single financial statement is a new to her. She found the whole topic of specialized area quite interesting to delve deeper into the requirement of statement. She was astonished as the detail made a state regarding the summary of financial statement, the nature of procedures, forming opinion, reporting consideration, all was wild flesh and the free verse, and she has enabled me at time. She was raring to apply this practically. Introduction. Special consideration applies respect of the audit of financial statement preparing in accordance with the special purpose framework. Similarly, the special considerations apply to the audit of single financial statement or a specific element or a special account or a special item or statement. The specific responsibility are cast upon the auditor. The case of understanding an engagement report on the summary financial statement derived from the financial statement audited in accordance with the same policy. There are three separate SA and above specialized areas: SA 800, SA 805, SA 800. It deals with a special consideration applicable in respect of audit of financial statement prepared in accordance with the special purpose framework. SA 805 deals with a special consideration applicable to the audit of single financial statement or a specific item in the financial statement. SA 10 deals with the responsibility of the auditor when undertaking an engagement to report on a summary of financial statement derived from the financial statement and audited in accordance with the SA of that same auditor. All the course of discussion standard on the auditing broadly deals with the following areas: acceptance of engagement, planning and performing of the engagement, forming an opinion, and reporting consideration of engagement. As we conduct special consideration, audit of financial statements, prepared in accordance with the special purpose. SA 800 of the special consideration audit of financial statement prepared in accordance with the special purpose framework is a special consideration applicable with respect to audit of financial statement prepared in according to special purpose framework. SA 800 is an address special consideration relevant to acceptance of the engagement, and SA 800 address the planning and performance of the engagement, forming an opinion and reporting on financial statement, but not on the purpose of expressing an opinion on the effectiveness of the entity's internal control. What is a special purpose framework? Yes, A100 defines a special purpose framework as a financial reporting framework designed to meet the financial information needs in a specific use. The financial reporting framework may be a fair percentage framework in the company's framework. The requirement of this applicable financial reporting frame is determined in the form and content of financial statement that will constitute a complete set of financial statements. For example, financial purpose framework, the cash or receipts or disbursement basis of accounting of cash flow information that the entity may be requested to prepare for creditors. The financial reporting commission act established and regulator to meet the requirement of the regulator. Financial reporting provision of a contract such a bond, a lien, a debenture, or a loan agreement or contract. The special purpose framework is a distinguished from a general purpose framework. A financial reporting framework designed to meet the common financial information need to be a wide range of general purpose framework, whereas a financial reporting framework is designed to meet the financial information need a specific user known as a special purpose framework. Consideration when accepting such in case of special purpose of financial statement, the financial information need to be intended user of the key factor determining acceptability of the financial reporting framework. Applying presentation of a statement. In the applicable financial reporting framework may be encompassed financial reporting standards established by the organization that is authorized or recognized to promulgate the standards of special purpose financial statements. In the case of the standards which we presume acceptable for the purpose of the organization follows establishment transparent process involving deliberate or consideration view of relevant stakeholders. Some law and regulations may prescribe a financial reporting framework to be used by the management in the preparation of special purpose financial statement for certain type of entity. For example, the regulator may establish a financial reporting provision to meet the requirement of the regulator. In the absence of the indicator of the country, such financial reporting framework is presumed acceptable for the special purpose financial statement prepared which entity. Where the financial reporting standards refer to the above, a supplementary for legislative regulatory requirement, SA2 can ensure requires auditor to determine whether the conflict between the financial reporting standard and additional requirement exists in the prescribed action to be taken by the auditor of such conflict exists. SA2 can agree in terms of auditing issue. Applicable financial reporting framework may encompass financial reporting provision for the contracts or a source of other than prescribed in preceding paragraphs. In this case, the acceptable financial reporting framework and circumstances of the engagement is determined by